Phil Newman, Chief Executive Officer of CRU Strategies.
We're at the PDAC right now. You did a start-off talk talking about iron ore and basic commodities. You had an interesting ring where you said that the iron ore business is a good business to be in, it's just a hard business to get into.
Yeah, that's absolutely right. I think the exact phrase was, if your name's on the list, you can't come in. I've been saying that for a few years, and that's pretty much a given, really. The barriers to entry for the iron ore market primarily are capital. You need to have very large projects to make good money. The incumbent producers have got very good assets, and it is quite difficult to get into the market. One thing there is plenty of, and that's iron ore. There's no scarcity of iron ore, but to actually get into the business, you need to have a pretty sizable project. You need to have logistics. You need to be able to get your material to market, and that's a challenge for a lot of places, especially some of the newer regions where iron ore resources have been discovered and projects are ongoing at the moment.
We're in Canada, we're in Toronto right now, and of course we hear a lot about the Labrador Trough. Is the projects that they have up there, is that something that can make its way into the iron ore, and also what is happening in West Africa with their projects?
Well, it's an interesting comparison to make, actually, looking at Labrador Trough and iron ore. Quite similar size regions in terms of their contained Fe. Both, about 24 to 30 billion tons of contained Fe. Lots of projects in both regions. Both areas have got a lot of infrastructure challenges. Obviously, the West African projects have slightly higher grades in situ, and also they're a bit closer to the big market, which of course is China. But from a political perspective, of course, Canada offers a bit more of a stable environment for major investments, and I'm sure that weighs on the mind of companies when they weigh up the pros and cons of the two areas. And when you look at the number of consumers, and when I mean consumers, I'm talking primarily about the Chinese, the Japanese, the Indians, number of consumers that have actually made investments into those regions. There's a few more investments being made into the Labrador Trough, although those projects are perhaps a bit further behind on their progress than some of the projects in Africa. One of the important and interesting things to watch going forward is what happens with some of the very large greenfield projects in Africa, which could make a difference, but they do require pretty significant capital expenditure, and there's some pretty significant decisions facing some of the larger mining companies as to whether they bring those on stream.
Iron ore right now in China is they're doing some work to develop their own iron ore mines there. How far are they ahead, and what type of work do they have to do?
Well, there's one thing about China. There's lots and lots of iron ore mines, but their grades are very low. The quality of their material in situ is very low. There's a lot of work to be done to bring it up to the quality required by the steel industry. And realistically, the mining industry, the iron ore mining industry in China is kind of split into two camps. You've got the larger mines, the state-owned enterprises. They're being encouraged by the government to modernise, to automate, to maybe have some sort of consolidation to make those mines more effective, bring their costs down. And then there's a lot, and I mean a lot, like thousands and thousands of very small private miners that tend to group together and share process facilities, and they tend to be quite high cost. And I think CRU's forecast going forward is that some of those smaller private mines will probably slowly but surely kind of disappear off the scene, particularly as the availability of cheaper imports rises, with Australia particularly expanding their production significantly. So obviously China is very important from a demand perspective in terms of the demand for steel, generating demand for iron ore. But it's very important that with respect to the price of iron ore going forward, we understand what's happening with domestic Chinese iron ore production. So it's an interesting one to watch, and certainly something we watch very carefully.
We started the week with a bit of an uptick with the iron ore prices, I believe around 146 right now. What is your long-term look for iron ore?
Yeah, I mean, you could really go mad, actually, if you looked at the iron ore price on a daily basis, because there is we have got used to a lot more volatility in the iron ore price. But the long-term view for iron ore is generally, like I said, there's not a massive shortage of iron ore resources. It's a question of bringing those projects on stream, and the CRU forecast is certainly that the price will weaken towards the end of this decade, down towards maybe the $100 mark or beyond. There's a lot of uncertainty, of course, with that, and it depends a great deal on what happens in China with respect to both production and demand, as I mentioned before. But the price forecast, we expect the price for the 2013 for the rest of this year to be reasonably good in the $135 to $150 range. I think that's a good price for a lot of the producers are making very good margins at those prices. But we do see weakening coming forward.
We're at the show in Toronto here. When you're talking to some of your clients, what are their number one question? What do they want to know?
They all want to know the same question you just asked me, of course. They want to know what the long-term price is going to be. I think there's been some discussion. I know that there's a lot of discussion at the conference with a lot of the Canadian juniors have been asking me about my opinion about what might happen with this rumour that Rio Tinto are potentially selling their IOC stake. Of course, it's not confirmed, but it's the fact. There's a fact that there's a rumour, and so I might as well discuss it. And I've discussed it with a number of companies about how that might impact the other juniors in the Labrador Trough region, and it's very interesting that the kind of jury's out at the moment, and certainly there's been some interesting debates over a few beers in the evening to try to work out what's going to happen with that going forward. But we'll have to wait and see. But it certainly could be quite an interesting development for the region.
Thank you very much.
You're welcome.